Okay, so next up, management representations, in particular the management letter, and this is how it's obtained. First of all, the auditor lists the areas for which representations are required. Then the auditor prepares the representation letter himself, notice, and sends it to the management. The management will then review it and sign it, and finally the auditor will pop it into the working papers. Just make sure that the letter's got as close as possible to the date the audit report is signed, so that any audit evidence is as up to date as possible. And if there is a delay in the auditor signing the report, you might want to get another management representation letter. Now, what goes into the contents of the letter? Well, I want to split this up in between what the ISA wants and the other things that you can put in. And the ISA, first of all, says that it's the management responsibility for preparing the accounts and for making sure they have a true and fair view and for complying with the FR framework, etc. So the auditor, obviously, he does report on the compliance with the financial reporting framework and does report on the fairness of the financial statements. But getting the management to confirm in writing that it's their responsibility, this gives the auditor some appropriate evidence that this is actually the case. The other thing that needs to go in is that the management has provided the auditor with all relevant information and they've given access as agreed in the terms of the engagement letter. And the reason for this is because it's difficult for the auditor to know if management have actually given the auditor all the information required. So if it comes to light later that management have hidden something or lied to the auditor, well, here you are. You've got written evidence that they didn't do this, that they didn't give us all the information. The final thing that should definitely be in this management representation letter is that all transactions have been recorded and are reflected in the financial statements. The reason again is that it's impossible for the auditor to verify that the financial statements are complete because management can hide transactions. Although completeness is an assertion that the auditor has to comply with, the auditor therefore has to ask the directors to confirm the assertion. After all, the financial statements are their responsibility. So that's what the ISA says has to be in it. Other things that can go in it could be plans of the company, details of any liabilities, whether they be actual or contingent, going concern status of the entity, and any representations on specific assertions that you might need, such as, the valuation of stock or the valuation of investments or something. So again, only the management run the company and the auditor is only gaining appropriate written evidence about various management decisions concerning the company. So that's what goes into it. Finally then, I want to look at any issues we might have in getting this management representation. So first one I want to look at is what it says there, the management integrity, that maybe the representations that are given us aren't reliable because we're worried about their integrity. So what we've got to do here is consider the effect on other audit evidence. At the extreme, we would resign from the audit because management can't be trusted, but we would at least modify the opinion to explain that we have trouble relying on the evidence. Another problem that we might have is that the representations that they give us aren't consistent with other evidence. So if that's the case, well, we've got to get other audit evidence to try and resolve the matter to see which is right. If it's not possible, then the audit report will need to be modified and we'd have to explain how there's an inconsistency between what the representations from the management say and what the other evidence actually says. And finally, you might have representations that, again, as we said, are unreliable or are not provided. So what you've got to do is, first of all, you've got to determine the effect on the audit opinion, okay, and that might mean a disclaimer. And if it's unprovided, if we can't get the representations, well, we have to discuss with management, reassess their integrity, think of the effect on the other evidence again, and again consider the effect on the audit report, which might again mean a disclaimer. Okay, hope it all helped.